let's continue. Please make sure you check on the previous videos so you can be able to understand what is happening on this one. We are doing all you need to know to master accounting transaction analysis. Let's go. So another transaction for today is transaction C. Transaction C says a physical stock taking. We're going to be talking about, this transaction is going to affect trading stock. As soon as they say stock taking, trading stock. Now let's go and check on our trading stock account. Remember from the previous videos, we added 11,000 and then we deducted 66,000. Okay, so far this is what we have. And then now we are told that trading stock taking 31,000 31 March 2020 revealed the value of trading stock on hand 521. So according to stock taking, remember who is a stock taker? We have a specialized stock taker for the business, and then the auditor, the external one, will come with his or her own stock taker to make sure that the amount that we have reflected, or the amount that we think, or we are sure, according to a business, we are sure that, okay, this is how much the value of our stock is worth. Only to find out, that is not the case. That is not the case. So then the auditor will say, you think your stock that you have on hand is worth this much. According to me, it is worth this much. Okay, so now let's go. So according to the auditor, the stock is worth 521,000. It is worth 521,000. If it's worth that much, let's go and check according to the business how much is trading stock worth. Now this is what we do. Was a calculator. What was a bill? Where am I at? 5. So it's gonna be 585,000 plus 11,000. Nope. 11,000 minus 66,000. 66,000. Right. According to our business, this is how much the value of stock is worth now. Now, according to the business, this is 585,000. According to the business, the value of stock is worth, before adjustment, is worth 585,000. But according to the transactions that we have went through, we added 11,000 and then deducted 66,000. So far it is worth 530,000 according to the business. But only to find out that is not the case. It is actually 521,000. So the difference between the two, it's 9,000. So if the value 530,000 is for the business, and then the value according to the auditor is less than the value that we think the trading stock is worth, or we know the trading stock is worth. If it's less than it, that means it's trading stock deficit. But if the one that the auditor has audited or is calculated to be, it's greater, that means it's going to be trading stock surplus. But this case, it's going to be trading stock deficit. So how much is trading stock deficit? 530 minus 221,000, which is 9,000. So trading stock will be affected, trading stock, and then another account that will be affected is trading stock deficit. Trading stock deficit. Okay, how much for trading stock? It's 9,000. How much for deficit? It's 9,000. Now for T accounts, T for trading stock, T for deficit. Deficit is an expense account. It grows on the debit side. It's going to be growing because of what? Because of trading stock. That is deficits. How much? 9K. And then due to double entry system, trading stock account, it's an assets account. It grows on the debit side but decreases on the credit side. Now remember, deficit decreases the value of trading stock, so it's going to be trading stock deficit by how much? By 9 20,000. Now let's go for which one do we go for. The first two spaces, remember, they are for income statement, and then which account is going to go to income statement is trading stock deficits under operating expenses. Okay, and then which account, it's trading stock deficits. Okay, and then how much we're going to be adding on other operating expenses, we're going to be adding 9,000. And then the second two spaces, they're going to balance sheet. So for balance sheet, remember, it's going to affect current assets. Which account is affecting current assets? It's trading stock for inventory. Remember, under current assets, it's going to go straight to inventory. And then under inventory, we're going to be subtracting trading stock. Trading stock is going to be deducted. Trading stock is going to be deducted by how much? So minus 9,000. Okay, we're going to be deducting 9,000. Now we're going to be left with on hand 21,000. We're going to be left with on hand 21,000. Remember, on your inventory, you should reflect, or you should put there 530,000, not 585. Or you can just show how did you get to 530. So 585 plus 11,000 minus 66, and then after that you deduct this 9,000 for deficit. I hope that is clear. Away.